Sellers are not selling. Sellers aren't even listing their properties right now. We have a 20-year low in the amount of new listings, and this is likely what's making the real estate prices kind of stable right now. Now, real estate prices are always kind of slow to go down when they are going down, and people use the term sticky, but there's a very good reason right now why the sellers are not motivated to sell right now. So I'm going to be breaking this down for you in today's episode of Prime Properties TO. Now, if you're looking for some help on how to navigate this, wacky real estate market right now, because it is very wacky, you can book a call with me using the link that's on the screen right here. It's www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zen, and I run a RE/MAX brokerage in the Greater Toronto area on top of making awesome real estate content that's educational for you, just like this one. Now, I briefly talked about this week's topic last week in the Market Watch, but I wanted to elaborate on this even more because I think it's going to be a very, very important factor in where the market's heading after 2022. Now, I am of the camp that higher interest rates will make prices go down. But no inventory is what's going to make prices go up. And it's weird. We're actually seeing both of that right now. So here's a chart to show you the number of listings we got in the Greater Toronto area in September. And you can see 20-year low, right? Now, some would argue that, there should be a lot more listings because the higher rates for these, sellers will have to sell because, they're under the duress. But that's not always the case. Because StatsCan just came up with some numbers saying that a third of the Canadians own their homes with no mortgage. A third of Canadians own their home with a mortgage, meaning 2/3 of Canadians own their home. And the other third just rent, right? So if you kind of have the having to sell kind of biases, it's not really a true narrative. I think it's actually a false narrative because so many people have no mortgages. They're not really affected, right? Now, if you did over leverage yourself and you kind of quote unquote speculated, you're in trouble. But most Canadians, even if you bought recently, right, it's not going to be the first thing that's on their top of mind about missing a mortgage payment because it's going to be the last thing they want to do. They don't want to miss a mortgage payment that forces them to sell, right? So take with that what you want. But, if we are going to believe that higher interest rates are going to make more listings, it'll take longer than this to flesh out. So the question is, why are there so many listings? The general answer is, this is just not a good market condition to sell your house unless you have to, unless you have a picturesque perfect property, which is multiple offers right now. And just that simple. Now, anecdotally, a lot of the sellers that I talk to right now, I told them what they're going to get for the house and just like, I'm just going to wait it out, right? They're in no rush and they're not really concerned about the higher mortgage rates because they have a very small mortgage because they've owned their home for so long. Now, most of my investors are in decent shape, even with higher rates because they're cash flow positive and they're in no rush to sell. And we are also not selling because it's always buy and hold. So the only people I'm seeing that are rushing to sell are the assignment flippers who are, coming up to their closing and they can't close. Obviously, if things can change with higher rates, which will reduce buyer demand or, higher rates will make holding it that much harder. However, let me show you two interesting charts that I'm going to break down for you. Now, I broke this down into the previous chart. The first one here is about the amount of new listings for freehold, and the second will be condo. You can see here in freehold that we're at a very low listing amount. Again, 20-year low. And amongst those listings are a lot of properties that have been relisted as well. So there's not many quality listings. But if we look at the condo inventory, it's actually above the 20-year average. Now, I don't have data to back this up, but my suspicions and my spidey senses are telling me that those who levered up to buy a condo in the peak of the market are feeling the cash flow negative right now. So if you bought in February, you were like kind of cash flow neutral when you include the mortgage pay down in your calculations, which, by the way, not the right way to do it. So, after the higher rate, even if you got like the crazy summer 2022 rent, you're still underwater after paying down your mortgage, which is what you can see over here. And that's why you're making zero money right now. You're just speculating. Plus, if you can always build more condos, but you can't build more land. So, as an investor or someone who's in the market speculating, if I came to that conclusion and they came to that conclusion and they're under some stress, yeah, you would liquidate. Now, if you found this content useful, it probably means other people will as well. So make sure to help me smash the like button and subscribe to the Prime Properties channel. And while you're at it, if you are looking for some help on how to navigate this crazy real estate market while seeing crazy insights that I just showed you, you can book a call with me using the link that's on the screen. It's right here. It's www.chatwithzen.com. Now, here are some other interesting charts courtesy of Move Smartly that will, shed a little bit more light onto the matter of what's happening, right? So the first chart here kind of breaks down the number of homes and condos that were listed from May to July, right? And it seems very low on the freehold side and kind of average and normal on the condo side, which is what we saw earlier. Now, the second chart that layers on top of this is to show you the percentage of the homes that did not sell in that same duration. And you can see that the percentage of the properties that didn't sell is very high. It's in the 40s and 45s respectively for condos and freeholds. And it's so bad that the freeholds are mirroring the 2017 run-up in terms of unsold inventory, although a little bit under, right? So that's a lot of unsold inventory in the summer. Now here's a punchline. How many of those properties didn't sell and ended up on the rental market? That's the chart right here. And you can see that for condos, it's about a quarter of them that ended up on the MLS for rent and they didn't sell. Now keep in mind, just because we didn't record all of them, a lot of people do actually rent out their properties not on MLS via like Facebook or Kijiji. So it doesn't include all of it. And all that is also on top of getting a massive rent spike, right, that we saw in the summer. So this is probably why condo owners aren't like fire selling their properties, because they had that tailwind of increased rents, even though they were cash flow negative quite a bit from say like February numbers and February interest rates. Now, as for freeholds, 8% of them went on the rental market. This is a very low number because I would say there's a lot less investors who are in the freehold properties, unless you're talking about like multiplexes, which are very far and in between. So I suspect that those that didn't sell for the price that they wanted or need to, and they don't have to sell, they're not selling right now and they're not downsizing or moving up into a bigger home. They're just stuck in the market like a traffic jam. So where does this all end? Well, either the next rate hike reduces the buyer demand so much that even the little bit of new listings that we get starts getting stale, and those amount of listings starts building up, and that will ultimately cause the prices to fall because there's too much stuff to buy. Or sellers just keep holding out and the rate hikes don't affect them as much as what we've seen recently. And right now, it looks like the latter, which is a really, really weird phenomenon despite having massive interest rate hikes. So it tells me this: Torontonians are probably optimistic about where real estate is heading right now in the long term, despite having increased carrying costs from higher interest rates from the Bank of Canada. Otherwise, if they're not, why would you not sell your property right now, cut your losses if you think it's going to get that much worse from here, right? It's kind of like a game of chicken right now between the buyers and the sellers. Who's going to blink first? And then the oncoming traffic that no one has any idea who's going to hit the hardest are interest rates. It's crazy. It's weird, right? Hopefully this gives you an idea of where the market is. And if you are looking for help on how to navigate this weird, wacky real estate market, you can book a call with me using the link right here. It's www.chatwithzen.com. Until next time, your move, your future. See ya. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.